What if I told you Nevada's housing market isn't just slowing down, it's already halfway off the cliff and barely anyone is talking about it? If you're thinking, hey, that sounds dramatic, no, you're not wrong. But it's also not far off. Behind the shiny new developments and real estate hype, there's a slow-moving economic landslide building up steam. And if the data holds true, 2026 could be the year the dam breaks for Nevada. Nevada? What do we call it, guys? Leave it in the comments. Let's start with the obvious. Nevada home prices soared 89% since 2020, but now all those factors that pumped up the market, low interest rates, pandemic migration, cheap money, gambling, other things, they're gone. In their place, water restrictions, mass layoffs, collapsing tourism, and a real estate bubble that might be even more fragile than in 2008. Stay with me because at the end of this video, I'm going to show you why 2026 might be a once-in-a-generation opportunity as well for some, but only if you're paying attention for the right signals. All right, let's talk water. Lake Mead just hit its lowest recorded level, and internal documents from the Bureau of Reclamation project mandatory 35% water cuts to Nevada by 2026. That's not a hypothetical, it's a legally binding disaster trigger. Major insurance companies already have the memo. They're quietly pulling out of the Nevada market. Without water, you guys, homes lose value and fast. Without insurance, they can't even be sold. Builders are backing off too. Major projects are being canceled. The housing boom isn't just slowing, it is screeching to a halt. And here's where it gets even darker. California just won a federal court battle, giving it priority rights over Nevada for Colorado River water. When Tier 3 shortages hit in late 2025, Nevada takes the hit first and worst. That means limited irrigation, housing restrictions, and ultimately a plummet in property values. Toll Brothers already pulled $2.3 billion worth of new developments off the table. Why? Well, because the writing's on the wall and the smart money's already running. All right, let's pivot to the job market. The hidden unemployment rate, the one that counts discouraged workers and part-timers stuck in part-time heck, is already above 11% in Nevada, and it's about to get worse. Amazon, Walmart, and other major employers are planning mass layoffs by 2026. We're talking 73,000 jobs being eliminated. Robotics and automation are here, and they are ruthless. Add in Nevada's gig economy, which is imploding, and the picture gets bleak fast. Just to make it extra fun, the state's unemployment fund is drying up as well. Yay! At current burn rates, it goes insolvent in under a year if unemployment hits 15%. Guess what's projected to happen by Q4 of 2025? That's when the mortgage defaults begin. And the patterns here look chillingly familiar to what we saw in Michigan right before their 2009 collapse. Let's talk about a migration trend that almost nobody's mentioning, the California reversal. For years, Californians fled to Nevada for lower taxes, more space, and cheaper homes. But now, California is pulling a wild card. They just launched a $50,000 relocation incentive to bring people back, and it's working. One-way U-Haul rentals from Nevada to California are up 347%, and that is not a typo. Companies are joining the reversal too. Now, remote work tax laws mean California companies face a 13% penalty for having remote workers based in Nevada. Salesforce, Oracle, and Google are already forcing employees back to California. This just seems kind of weird, doesn't it? Gosh, Newsom is really trying to reverse what everybody has been thinking about him over the last number of years. The result? Panic selling. Tech workers who bought Nevada at the peak are offloading homes at six-figure losses, you guys. It doesn't stop there. Between 2020 and 2023, a staggering 41% of Nevada mortgages reportedly involved some form of income or asset misinterpretation. That's not a red flag. That is a bright, shiny Nevada Vegas billboard. And the FBI has quadrupled its mortgage fraud unit in Nevada. If these investigations come to light as expected in early 2026, we could see over 100,000 loans called due immediately, and that would freeze the mortgage market overnight. And speaking of Las Vegas, let's talk about it. It's not just a tourist town, it's a casino economy. But convention bookings are down 40% from pre-pandemic levels. Casino automation is slashing tens of thousands of jobs, and sports betting, the supposed savior, is being cannibalized by online platforms. Nevada's share of national sports betting dropped from 31% to 11% in 3 years. Reno isn't looking much better. Tesla and Panasonic are scaling back. The once promised tech boom is evaporating. Commercial real estate vacancies are worse than San Francisco. And as any seasoned investor knows, when office buildings go dark, residential isn't far behind. Simply because people aren't going to the office, they're not going to stay in Nevada. Oh, and here's one you probably didn't expect. the Airbnb Apocalypse. Nevada has the highest per capita short-term rental rate in the nation, but tourism is fading and local governments are cracking down. New regulations are slashing allowable rental days. Occupancy is down. Revenue is plummeting, and investors are bleeding cash. Many are already dumping properties back onto the market, with more to come. And let's not forget insurance. Premiums are up 67% in 18 months. 5 major insurers have already pulled out of the state. If you can't insure a home, you can't finance a home. That's a death sentence for home values. Construction defects are another underreported bombshell. Thousands of Nevada homes built during the recent boom are already showing structural issues. Some builders are facing hundreds of lawsuits. We're talking about foundation failures, water damage, and unlivable homes. These homes aren't just overpriced, they're falling apart. And finally, the financial engineering problem. Here we go. Over a third of Nevada mortgages in the past years were subprime in disguise. Non-QM loans with sketchy terms. Many of these are already delinquent. HELOC usage has surged. Homeowners are using equity to stay afloat. And once prices dip 15%, hundreds of thousands will be underwater on multiple loans. So why 2026? Because 5 massive dominoes fall at once. $47 billion in commercial loans come due, infrastructure spending ends, ARM mortgage resets hit peak levels, state budget cuts begin, water restrictions become legally binding. Each of these factors alone would be bad enough. Together, they're a coordinated market collapse. If you think this sounds like fear-mongering, know this. Private equity firms are already raising money for 2026. They expect to buy homes at 35 to 40 cents on the dollar. That's not a theory, that's a strategy. So what does this mean for you? If you own a home in Nevada, time is running out to sell before inventory floods and values implode. If you're a buyer, wait. The opportunity of a generation is coming, but only for those who are ready. Get liquid, get educated, and if you're not already subscribed to the Deal Watch, our free newsletter tracking under the radar real estate shifts across the country, now is a really good time to join. We'll be watching Nevada closely, but also tracking the next wave in Arizona, Idaho, and beyond. The crash isn't coming, it's already started. The only question is, will you be ready when it hits full speed in 2026? All right, see you on the next one. Bye.